Okay, so we are going to start a new chapter. The name is Intangible Asset. So before we are going to towards intangible asset, let us discuss the basic definition of asset. So asset is something like that is having, we have studied in the basic concept that is having the present, that is having the present control and future economic benefit. Means if I am having the present control on anything, plus it has a future economic benefit that it will create the cash for me. For example, I have a furniture, so and I'm the owner of that furniture. I'm the table, the chair, and I'm using that in the office, in the business. So it means that it will be taking part in creating the future economic benefit. So that will be the asset. Same like that, the laptops, the projectors, the if I talk about classrooms, the whiteboard. So these all are like the asset of the business, because we have the present control and future economic benefit. These two are the basic points of asset. But in the today's chapter that we are starting, that is some unique chapter, because it is written intangible asset. Intangible means non-physical. Intangible mean non-physical assets. Now, some assets are like physical. Like for example, if we talk about non-current assets, if we talk about current assets, in non-current assets, if we talk about building, land, fixture and fittings, you can say furniture, laptops. These are non-current assets. And if we talk about current assets like receivables, like inventory, like cash, the current assets. These all are physical. But non-physical assets are basically intangible asset. And intangible asset, we have to do the proper treatment for that. And in this chapter, we will be focusing on the one intangible. We will study basic intangible asset. Then we will have a one example, and we will have a long concept about that example so that we can understand the intangible asset. So, the first thing is the definition of intangible asset. The definition asset, the basic definition of asset will be still same, because as I told you that the standard says that something on which you have a control, present control, and future economic benefit, that will be like your asset. Basic definition for intangible asset is same, but for intangibility there is some addition in the definition. So it is basically, you can say, is definition is an identifiable. Okay. So identifiable means that obviously if it doesn't have the physical existence, then how can we identify? So identify doesn't mean that you can see. Identifiable, you can feel. You can feel, yeah, the thing that is intangibility. And identifiable non-monetary. I will discuss this non-monetary point as well. The wait a minute. The identifiable, I've said, I've told you that identifiable doesn't mean that we have, if there is no physical substance we can identify. Identify is something that we can also see, that we can also feel. So an identifiable non-monetary asset, non-monetary asset, we will discuss that what is non-monetary. We will discuss that what is non-monetary, but an identifiable non-monetary asset, no, without physical substance, without physical substance. Without physical substance. This is a basic definition. This is the basic definition of intangible asset, that it is according to the standard as given this definition. An identifiable non-monetary asset without physical substance, without physical substance. But the main thing is, that actually, that the basic definition will still be same, that it is the resources that is under the control of of the company and will create the future economic benefit. Let me show you some points related to that, that is written in your notes. Let me show this. Wait a minute. For the definition, basically, he can ask you. See, it is the resource controlled by the entity, because as it's the asset, So it is a resource controlled by the asset by the entity as a result of past events from which the entity expects to derive future economic benefit. So it, according to standard asset, is has these all characteristics, but it lacks physical substance because it has no physical substance that is not available physically, and it is identifiable and separately distinguishable from goodwill. Basically, from goodwill, the point goodwill we will discuss just in a while. But you have to understand one point here. You have to understand one point here, that it is identifiable and separately. It is identifiable and separately distinguishable. For example, if I tell you that there is something like that has no physical substance but has the proper intangible classified under intangible asset. If we talk about the development in the business, for example. So when you're doing the research and development, when we are doing the research and development, so this development in research, this is not the physical thing. Research and development is something that you are that you are thinking that what you have to do. So for that you are you are like incurring the cost. So research and development basically is, research is not basically asset, but the development, I that's why I marked that. So development is the part that is not having any physical substance, that is like that is the something like business. Development is something like business has a control, because obviously development is done by business as a result of past event, obviously, and company are expecting future economic benefit. But the main thing is it has no physical substance. That's why it will be classified as asset. But not always. Just in one case, we will study about that. But I am saying you that the basic definition for this is identifiable. No need to confuse about like identifiable is having identifiable is like having physical substance. No, identifiable you can feel is identifiable as well. Non-monetary is now what is this non-monetary point. Actually, non-monetary point, if you can say, is something like that is having the non-monetary doesn't mean that it doesn't have a value. Basically, non-monetary is basically if we talk about like something that can be sold separately, something that can't be sold separately. Separately means what is separately? Like for example, we have a company, we have a company, and we are doing research and development. Like as I told, a basic definition, basic example here. We'll study this very detail because this is the main part of our chapter, research and development. So basically, development is whenever the development is asset, because it has two parts. Sometimes development is expense, sometimes it's asset. But assume the asset is there here. So can you can you sell development separately? Separately means we can say is separately means that if you are, for example, want to sell the want to you want some money, you want some cash, so you can't sell the development separately. You can't sell that is like you can't sell it separately. You can sell the whole business, but you can't sell it separately, because it's the characteristic of intangible asset. It's the characteristic of intangible asset that you are like you can't send that intangible asset separately. So that is like that is not going to give you money. That is not going to create the monetary, or that is not going to create the extra money after by selling it separately. If you want to generate the money from no, intangible asset by selling it, you can't sell it separately. You can sell the whole business for that. Means if you are having the company, if you are selling the company, total company, then you can say that in it R&D is also being selling. Like development, asset development is also selling, being sold. But you can't sell it separately. So that is the point, that non-monetary, that it can't create the cash by by being selling separately. And without physical substance, you already understood. So I am writing here that non-monetary is that intangible asset can't be sold separately and create money. So it can't be sold separately and create money. It can be sold. I can say here that it can be sold as a part of business, when we are selling the business, but it can't be sold separately and create money. Like if you talk about non-current asset, land. So obviously it can be sold separately. You can sell the land, create the cash. If you talk about building, you can easily sell the building. If we talk about furniture, we can sell it separately and create. But if we talk about any intangible asset, it can't be sold separately. It can be sold with a complete package of business, and it can be sold as a part of it. So this is the basic terms that were related to the intangible asset, because these are like very important in case of theoretical MCQ. They can ask you these things, because sometimes students says that the if anything has a value, because obviously intangible assets have some value. So when the examiner says that is it non-monetary, so that mark that it is monetary, but it is not monetary asset, it is non-monetary asset. Okay. After that, the thing that we have to do is we have to understand the basic concept, that some difference between the tangible non-current asset and intangible non-current asset. Tangible non-current asset and intangible non-current asset. I am taking some part from the notes that writing here. So tangible. Now we are going to going to do some differences. Wait a minute. Yes. So asset, tangible non-current asset and intangible non-current asset. First of all, tangible. Normally have physical substance, land and building. Normally have physical substance, land and building. Normally involves expenditures being incurred. Normally involve expenditure being incurred means that the expenditure incurred on asset will be the part of asset. As I told you that when the asset is purchased, whenever any non-current asset, any tangible asset is purchased, any tangible asset is purchased. So you don't only note the purchase cost as a part of asset. For example, if you are doing any transportation on it, transportation cost, and you are taking the you are taking the non-current asset to your premises from the supplier's premises. So you will add it and make it a part. So that is written. It normally involves expenditures being incurred. That is a part of that asset. Cost of tangible non-current asset is capitalized. Capitalized means that you have to make it asset. Because they think that when you purchase cost is, for example, purchase cost is 100, transportation cost is 50. Now the cost of asset is 150. So this cost of asset is capitalized, mean that it is classified as asset in SOFP. Capitalized means asset in SOFP. Capital if they think that it is not capitalized, it means it is like expense. But tangible asset is not the expense. Tangible asset is classified as an asset in SOFP. That is written. And depreciation is a reflect of wearing out the asset. Depreciation is something like when you are obviously using the asset, so it is being depreciated on the daily basis. Depreciated on the daily basis. This depreciation is the reflection of wearing out the asset, that whenever the asset is being used, so depreciation you have to charge. That is intangible asset. But for intangible asset, because this is our topic, so we will focus these points more. Do not normally have physical substance. Like for example, copyright. If any company has a copyright or something, for example, I have a copyright. For example, I'm making the having the YouTube channels, and I'm having the proper production team. So I will be having the copyrights of my content, So copyright, if you say, obviously copyright is something that today you have a control, you have a right. Copyright is something that you have control, and in future it will create a cash for you. How? Because if you have a copyright, it means you are having something special. That's why you are having the copyrights for that. That you say that no other person can use your content. So that is like obviously you are having some special thing, and that is used in the business and will create the future economic benefit as well. The copyright is having no physical substance, so that's the intangible non-current asset. So normally doesn't have has a physical substance, can be purchased or may be created within the business without any expenditure incurred. For example, it is like as I told you that normally involves expenditure being incurred because obviously when you purchase the asset, you have to you have to give the purchase cost, purchase price, then transportation, then other costs as well. But in intangible asset, sometimes without incurring the expense, it can be created. It can be created. For example, I am providing the services, and I'm providing, for example, I'm providing the traveling services, the travel agency we are having, and we are like providing the travel services. So with the passage of time, with the passage of time, as I'm providing services again and again, and very good services again and again and again. So what will happen? The name of my business will get, obviously, will gets famous. It gets famous with the passage of time, and it will convert into the brand. It will convert into the brand. So this brand is basically an intangible asset. Brand name is also intangible asset because brand name is same. This if you uh, uh, take learn the revise the definition of that, the definition was something that has a present control. So on the brand name you have a present control, and future economic benefit is also there because brand name is something that will create you the future economic benefit in future economic benefit. So that is like intangible because no physical substance or brand is there. So intangible asset. So this type of intangible asset is something that you don't have purchased, or don't have incurred some amount. So it can be purchased, or it can be purchased, but or may be created within the business without any expenditures, many expenditures being incurred. Okay, that is internally generated. So basically, brand is internally generated. That's why it's written that is internally generated. For example, brand. So that is like no need to you have to pay for that. It is created by its own. After that, purchased intangible non-current assets are capitalized. Generally, intangible assets may not be capitalized. So generally, internally generated asset may not be capitalized. It is very important point. It is very important point that let me tell you this point. There are two cases. One case is, for example, you are performing very good. You are performing very good, and through that, you have created your name, your business name, a brand, a proper brand due to good services. Due to good services, customers are coming in again and again, and you have a brand name now, right? Obviously, this brand name, I've told you in the last point, that brand is intangible asset. Intangible asset. Now, if it's asset, it must be written in SOFP. Obviously, it's an asset. It should be written in SOFP. But here is one important point. Here is one important point that if you have internally generated any intangible asset, it can't be recorded anywhere. Can't be recorded. Means we can't write this intangible. We know it's intangible asset. We can't write this intangible asset in SOFP. But on the other hand, if we have purchased any intangible asset, for example, we have purchased the brand name. For example, we have purchased the brand name. So this brand name we have, for example, purchased for $1,000. Now we can write in SOFP that we have intangible asset of $1,000. Because why is it so? Why we are not recording any internally generated? Not only for the brand name, for any case, we can't record internally generated intangible asset. We should have known that that there is one asset, but we will not record in SOFP. Why? Because due to prudence concept, prudence says that never overestimate or even overestimate the assets. Now, obviously, internally generated asset means that we have generated by our own. We have generated by our own. So obviously, we will not be confirm about the exact amount for that. We will not be confirmed about the exact amount because exact amount is basically confirmed when we are going to sell it. When we are going to sell it to someone, then we will be like having the exact amount for that. But if we are not selling it, it's internally generated, and if it's internally generated, so we will not be having the exact amount. So what we will try, I'm going this part you have to tell me that what businesses will do. They will try to overvalue the asset, the intangible asset, or undervalue the intangible asset when they are internally generated and they have to decide by their own. So what they will do? They will overvalue their intangible asset or undervalue this brand if it's internally generated by them.
Overvalue.
Overvalue. But prudence says that never overvalue, never overestimate the asset, because prudence knows that every manager wants that assets must be overvalued. So internally generated asset, every manager will like to increase the value. So that's why prudence, according to prudence, it is not allowed. It is not allowed, and according to standard, with the prudence concept, using the prudence concept, it is not allowed to record internally generated asset. It can't be written anywhere. But if any asset is purchased, it means that now you have paid for that. Now you have paid the exact amount for that. So that you can note in SOFP, but internally generated is not like capitalized or not like recorded. So that's the part written here. Purchased intangible non-current assets are capitalized. Generally, internally generated assets may not be capitalized. And after that, the point related to depreciation. If we talk about tangible non-current asset, it is depreciated. But for the non intangible non-current asset, depreciation is replaced with the word amortization. Means amortization is still amortization is the depreciation, but it is a depreciation of intangible asset. Intangible asset. If I'm going to tell you that do this question of amortization, so it's not like a different question. No, same straight line reducing balance, same amortization is same depreciation, but word used for the intangible asset depreciation is amortization. So it is a reflection of wearing out of capitalized assets. So there are some examples for intangible non-current assets. First of all, as I told you, development cost. If you remember, see, development, R&D, the development in R&D, not the research. That's why it's not only written the research, only development cost. But still, there are some cases in which development cost is capitalized, means it's an asset. Some cases still it is considered expense. We will study just in a while. After that, goodwill. You have a brand, you have a goodwill. Goodwill means that you have a good name due to your services, due to your product. You have a good product. You have a good name. So that's the goodwill. That is the asset. Obviously, that is the asset, and it's an intangible asset. Trademarks. Trademarks. See, if for example, we are having the name of accountancy hub, and we are having the proper logo for that. If you have seen the our logo of the business, so we are having the logo proper with the written name here. So actually, this we are having registered with the government of Pakistan. We have registered our institute, so we have a trademark for that. Trademark means that no one can use our name, no one can use our logo, no one can use our name. No one, if someone is going to use our name, or if someone is going to use our logo, we can file a case against them. That is basically the trademark. Now, trademark is something that is intangible. Trademark is the basically is the approval, and approval is obviously intangible thing. Approval by the government that okay, you can use this name and logo. No other party will use it. So that is also the intangible asset. Licenses. So licenses is also licenses is sometimes student says that license is physical, because if you see it's a physical page, or it's a physical booklet. So I normally say that booklet is not the license. That is written on it that you have the approval. So that is the approval to use anything. License of, for example, weapons, license of vehicles, license of the businesses, license to do export and import. So that is like license, and license is approval, and approval is intangible. After that, patent. Patent, what is patent? Actually, that is also intangible asset, but let us discuss that what is this. For example, if you invent anything, invent means that first time you have done the invention. Invent means you have make the new product. You have make new product, any of the new product, you can say new design of anything, you can say. So whatever you have made new, you have invented something. Now you know that this type of product is not used throughout the world, and it is the new product. It is an invention for all the world. For all the world, it's a new product. So now what you will do, you will go to the government and you will say that I don't want that this design or this product should be stolen, and I want to be the owner of this product, and no one, I don't want another anyone else to make this product or design, because I want to register it as my invention. I want to register it as my invention, and I don't want, if anybody wants to make this product or design, he can make, but he can take the permission from me first, because it's my invention. So this is like patent. This is known as patent. When you are going to the government, you say that I want patent rights. Patent right means that something that you have invented, the product, the design, something like that. You have just took the right from the patent rights, and you have to took the right from the government that it's my own thing. Now anyone else can't use it without my permission. Without my permission. For example, I can't use the name of any food chain. For example, if I talk about the KFC, so I can't use it. I can't use it. I have to pay. I have to pay the amount for their name first. I can't use the KFC as a name by like I can't use their name without their permission. That is like patent. So patent is actually used for the products or design, because the real owner of that design or product is like have registered the patent against that product. So this is like for the physical product, physical design that you are going to make and you have invented. So that is like, for example, let me tell that I have made the I have for example, if I talk about any machine, any sewing machine, any sewing machine, any new design I have launched and I have made the patent, and out a machine with the proper new design, new design, I made the machine. So that machine, when any other wants, any other party is going to make that machine. So what I will do, I will go to the government, I will go to the government, and I will say that I have registered the patent against that machine. So why another party is making that machine? So what government will do? Government will say, will ask the party that why they are selling this, because they have a patent for that. Patent for that. If you want to make the machine, you can go to this party and first ask them. But if there is something like, if there is no patent for anything, anything, then you can use it. Then you can use it. And the general thing doesn't have a patent. Like for example, I say that I make the pen and I say I have a patent for that. So that's not the normal thing. Pen is normally used everywhere. It doesn't have the patent. Like, right? So new product, new invention is basically having the patent. Patent is obviously the approval, you can say, or the license type that you another can't use. Only it's your own product. That is also intangible asset. After that, copyrights normally is used for, patent is used for products, and copyright is the same thing, but it's used for the content, you can say your books. If you have written the books and are having the copyright for that, so it means that no other party can use you can print your books and can sell that, because you are having the copyright. You have to take the permission from real owner, real author of that book, so that whether you can sell their books or not. If they're not allowing you to sell it, you can't sell it. Like content, like sometimes you are listen the word that this YouTube channel has the copyright has faced the copyright claim. So copyright claim or copyright strike. So what is that? If they are using, if any YouTube channel is using the stolen content of any other channel, any other like any other person, so they can send a copyright claim for that, because the main person, main owner of the content is having the copyrights for that, and copyrights is asset, because again it's creating the future economic benefit, because when you have copyright, you have a content, and if you're having the content in business, you will be having the future economic benefit. After that, franchises, as I told you, the KFC example in patent doesn't have as the KFC example. KFC example is basically under this franchises. Actually, patent is like for the product, not for the any brand name you're using. The franchises is something like, if you have purchased the franchise of any like a food chain, any like travel agency, like you have purchased their name, you have purchased their name. Obviously, that franchise that you have purchased, this complete franchise is basically franchise as as a name, as their name is basically intangible. Franchise as a whole maybe is having the building and all that. That's not tangible asset. But the franchise at its name, here means that the name of the popular brand you are going to purchase, and you are going to use their name for the business. That is like that part, the name part is basically the intangible asset, because name is the name and value and goodwill, basically they are intangible. And franchises is that's why classified under intangible asset. Is it clear? All the examples are clear for intangible asset?
Yes, sir.
Okay, so one point here we discussed is the amortization. As I told you, that amortization is same as the depreciation. So let me write the question here for amortization. One, then we'll go towards the next topic. So simple. W Limited purchase the patent. Purchase the patent. Patent is obviously intangible asset with a useful life of 10 years or for 20,000 on 1 January 2009. So after 1 year, they are asking to prepare the extract of financial statement. So what you have to do, you have to obviously that for SOFP, because if we talk about the complete extract, then SOFP and SPL both extracts I will. Right. For SOFP, I will write in assets the patent with the value of 20,000, with the value 20,000. And if we talk about when the patent are purchased, that is written like patent here. That is written like patent, we are writing here directly in assets. But once it is depreciated, so we are going to deduct accumulated amortization from here. No accumulated depreciation, accumulated amortization, and we will calculate net book value. We will calculate net book value. Patent cost minus patent accumulated amortization, like depreciation is deducted from cost, here the amortization is deducted from the cost, and you will get the answer of net book value. On the other hand, SPL will be having, if in the year there is any depreciation, we can't write the depreciation, sorry. If any amortization is there, amortization expense, we will write here. Simple, 20,000 and with a useful life of 10 years, simply 20,000 divided by 10 years. As in straight line, it's 2,000 per year amortization, and the entry for it will be like same as depreciation, but here we will write as debit amortization expense 2,000, and credit accumulated amortization. Credit accumulated amortization 2000. So actually, the entry was, if you talk about the entry of depreciation, it is like debit depreciation expense to credit accumulated depreciation. But here for amortization, you will replace the name. So what you will write is 2000 after 1 year. They are asking for year ended 2009. So it means 1 year depreciation is there. So accumulated amortization is there. Net book value 18,000, and accumulated amortization expenses like 2,000. Amortization expenses 2,000. Is that clear? Is it clear?
Yes, sir.
Okay. Now we are going to do the topic research and development. As I told you that the research and development, that is basically the non-trend but not the tangible. It's the intangible non-trend. So we will be having the complete discussion for this research and development. That's very that's a major topic of this chapter, research and development. Now, research and development is, first of all, we will understand that research and development activities are important because obviously companies are having a competitive environment. Everyone wants that they perform good. So they are doing the researches on the customer, researches on the good product, researches on the good benefit they can provide to the customer. So actually, research is something that is like continuous procedure, that is like again and again you are watching on the things, facts and figures you're watching, you're watching everything you're watching that can help you in the business. So actually, research is the definition as per the standard, actually this standard, obviously all accounting treatments have some standard. IAS 2 inventory, IAS 16, tangible non-current asset. The the intangible asset, the standard is basically IAS 38. IAS 38 tells you about, IAS 30 tells you about the intangible asset. So according to IAS 38, there is the definition of research. According to IAS 38, there is the definition of research. So what is the definition of research? Only the research under the under IAS 38. So IAS 38 says that it's written, IAS 38 defines research as original and planned investigation, original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. If we talk about general examples, so research is something like we are focusing on the things that can help you to make your business better. But according to standard, there is proper definition that original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. This is the definition of research. And same like that, IS 38 has given you the definition of development as well, because research and development, these are like two topics related. So development, what is development? Development is the application of research. The research you have done, now you have to apply that research. Obviously, if you have researched something and you have find something important, so what you will do now? Apply that thing. So application of research findings or other knowledge to plan or design for the production of new or substantially improved material, devices, products, processes, systems, or services before the start of commercial production or use. So actually, first phase of the product is research. Then you do the development. So research can be related to making the not only the new product, new products, new processes, new systems, new services. That is written here. Improve material, devices, products, processes, system. The research can be for that, for these things, like for material, for making new product, for making new devices, new processes, new system, new services, new designs. So research is basically about that. Then in development, you apply that, you experiment that whether everything is okay. And here it's written before the start of commercial production, means that development is still when you have started the production. When you have started the production, it means the development is done and now you have started the production. So before that, what you are doing is the development, research and development. So first part is research and second part is development. After that, if you think that the product is developed, research is proper, and you think that the product is developed properly, development is done properly, then you don't need to uh, wait for it and just start the production. Now development phase is end and you will start the commercial production and will going to sell that product. But for this research and development, actually we have to understand some accounting issues, accounting treatment for research and development. For research and development, you have to discuss, understand the concept of accounting, that how we will do the accounting. So actually like research is something research is something like, if I tell you a very important point, that assets main definition is present control, and research is the thing here that you don't have the control on it. Why? Because research is something that can be failed as well. It's not every time that research is in your control. You are researching something and all that, but due to the some factors, external or internal factors, you are thinking the this research will be failed, because it is something that is not in your control. It is like you are researching something, it can be in your it can be helping you, it cannot be helping you. So it means that it's not like having the you are not having the proper control on it. Second definition of research is future economic benefit. So if research is not succeeded, if research is not good, or if research is not giving you the benefit, so it means it will not give you the future economic benefit. So that's why it can't be classified as assets. it can't be classified as asset because it is not completing the definition. It is not on the definition of asset. But yes, yes, research will be classified as expense. Research will be classified as expense in SPL. Research will be classified as expense in SPL. Again, I'm telling you that why expense? Because it is not creating any future economic benefit, or it has not a proper present control is not there on the research. But main point is obviously future economic benefit is not there. If there's no future economic benefit, then obviously no classification of asset will be there. So that's why it is classified as an expense in SPL. And what will be happen to the development phase actually? So for the development, if I tell you, so it has two cases. It has two cases. Development has two cases. Actually, development is something like that can be expense, that can be asset. But this depends on criteria. One criteria. If the criteria is met, if the criteria you say is met, then you will classify it as asset. And if it's not met, if the criteria is not completed, then we will classify it as an expense. So it totally depends on the criteria. It totally depends on criteria whether it is classified as, whether it should be classified as the asset, or it should be classified as, expense. So I am writing here the criteria for it. Let us discuss these points for the criteria. That criteria is, if it's met, then it's okay. We will classify it as asset. Otherwise, no. Wait a minute. Okay, so now it is very important for theoretical terms, because obviously these topics are like not, I'm not doing any calculations. So theoretical wise, it is very important. So development cost we are going to study according to IAS 38. Intangible asset development cost must be capitalized as intangible asset if they meet the definition of an intangible asset and also meet the recognition criteria. So intangible asset, you can make the development cost an intangible asset, but if they are meeting the criteria, typically this will be like criteria are met. So it is like criteria is like pirate. Pirate, remember this word. Pirate, why? See, every criteria is like PIRATE. That's why it's written pirate. So just remember this pirate word in your mind, so that if you forget it, you must be getting aware of that. So pirate, first of all, P stands for probable inflow of economic benefit from the asset, whether through sales or internal cost saving. So first of all, the development is like, if first criteria is meeting, then we'll go towards the second. So probable inflow of economic benefit from the asset, it is simply one thing, simply one thing. It is basically the basic definition of asset, because asset is something that you have the having any future economic benefit, future economic inflow, or future economic benefit. That is basically the basic definition of asset. It's written again here. Again, it's written here. Whether through sales, means if you sell it, or internal cost saving, means if you have done the development, and that is why your internal cost is being saving. So it means again, it's like something in it's economic benefit, because if it is saving your cost, that is economic benefit. So if it is having this point, then it is the first point of the criteria being met, but all of the point must be met. So this is first point is simply the basic point of asset, that economic benefit must be there, future economic benefit must be there. After that, I stands for intention to complete the asset and to use it or sell it. See, you are in development phase. Now you are not getting, you should not get confused with intangible asset, because intangible assets are other as well, like trademark and copyright, patent, right? You are in the development course. In development, you have to understand that if you have the intention, you are in the development phase, and you are having the intention to complete the asset. Sometimes you are making the asset, you have made it 50%, but now you get demotivated and you discontinue it. That what we will do, maybe we will fail in future and would somehow like we don't have the cash, proper cash to complete the asset. So that's why it's written, if you have the intention to complete the asset, to use it or sell it, basically you have to take the benefit, but once you will complete the asset, obviously then you will take the benefit. So intention to complete the asset is the second point that must be met to make the development of an intangible asset. After that, R stands for reliable measurement of development cost. This is very important that you must be measuring every cost that is being incurred on the development reliably. Like for example, you want some you want to know that how much amount should be how much amount should be recorded against this development of game. So this is very technical thing that obviously proper reliable resources must be there that can tell you that this amount is incurring at this stage, this amount is incurring at this stage, this amount is incurring. You have to use a reliable measurement for that. After that, adequate financial and other resources to complete the project. That is something the point of the B point and D point is basically interlinked. Intention to complete, I have told you there that whether you have the money, whether you have the amount to complete the asset, to complete the project, that is it. And the adequate financial and other resources being material and labor and all that, if you wanted to complete the project. So to complete the project, if you have enough money, you have enough finance to complete the project, then it's good. It's in the favor of development cost point. After that, technically feasibility to complete the asset so that it will be available for users. And technical feasibility means that you have like every technically you are not like saying that we don't have the machine to complete. For example, the unit is made 90% development has been done, and now you are saying that we don't have the machine to make it. We don't have a machine, proper equipment is to be used to complete this development, but equipment is not available. So technical feasibility is very important to complete the essay. So it will be available for use or sale. This is a part that it should be technically feasible to complete the essay. Basically, if it's not, then it will be not classified as an essay. After that, expected to be profitable. That is the first point, and the last point is basically interlink. First point was probable inflow, the economic benefit, basically future. That is like again expected to be profitable. That the cost of the project will be exceeded by the benefit. Will be exceeded by the benefit generated means if your benefit is more and cost is less, then it's okay. Like you will never do the development where the cost is more and benefit is less, because whenever you are doing something, you do the cost benefit analysis. If the benefit is less and cost is more, you don't need to do for that project. So actually these all are the points. If all these points are being met properly, all these points are met for the development, then you can say that that development is can be classified as an asset, otherwise it will be classified as an expense. That's the point for development. Now if the above criteria are not met, development cost must be written off in SPL. SPL means as an expense you will write off. Write off means expense, so you will write it as an expense. If research expenditure has been treated as an expense, it cannot be subsequently reinstated as an asset. It means that once, for example, in 2022, you are doing the development and at the end, till end, the criteria is not met. So you have made the expense of 10,000 development cost. Development expense 10,000 cost. Now once you have written the value for this, like 10,000, so then so now you can't change it in 2023. You if the criteria is met, for example, in 2023 the criteria is met. Now obviously development cost must be capitalized. Now you can't say that this expense must also be classified as an asset. Why? Because it is already written as expense in the last year. It is gone now. So if the research expenditure has been treated as an expense, means here expense, it cannot subsequently that afterwards be reinstated as an asset. That if in 2023 the criteria is met and now you know that development should be written as asset, you can't reinstate the expense that is already been recorded as an asset. That was the important point, important theoretical point. Now, again here as well for development expenditure, amortization will be there. I'm writing here the point that amortization for R&D, R&D means only the development part of that is asset. So there is amortization as like other assets amortization. And but for amortization there is some point. So the point, for example, you have done the development and now you have to classify it as asset. So amortization, when amortization will start? When amortization will start? Because development is like is if development has met the criteria. So when the development has met the criteria, from there, from that point we will start the amortization calculation, or from where? So this, there is a point written that amortization for development we will start once commercial production is started. Commercial production is started. Let me tell you according to timeline. For example, on 1st January 23, the year started, and on 1st March 23, your criteria is met. The development criteria is met, and you have to classify it as an asset, obviously. And after that, the criteria is met here in first March 2023. But after 6 months, on 1st September 23, you have started the commercial production. So actually, if you see asset, it is classified on 1 March 23, but you will not start the amortization from here. You will not start the amortization from here. You will wait for the commercial production to start. From here, you will start the amortization. You will start the amortization. So actually, this is the point. This is the point that from whenever the commercial production is started, you will have to classify the or calculate the amortization from that one. And after that, one more thing, that each project, that obviously when you are make the product, you are working on the project, or you are working on the product or design. So each project should be reviewed. This is very important point. Theoretical important point is there, that each project should be reviewed at the year end to ensure. Right? This is important point. They can ask you an exam, that each project should be reviewed at the year end. Each project is an intangible assets, to ensure that pirate criteria are still met, because you have to watch it again and again, that for development is the pirate criteria meeting or not. If they are no longer met, sometimes it happens that criteria is met, pirate criteria is met, but after 2 years the criteria of development pilot criteria is not meeting. Like after 2 years, you come to know that development is not meeting the criteria. Now, what you will do? If they are no longer met, the previously capitalized asset expenditure must be written off as in the SPL immediately as the expense. For example, in 2022, in 2022 June, criteria met. In July, commercial production started. After that, here in November, obviously when commercial production started, and in June when it was like criteria that you have classified as an asset, but in November again criteria is not meeting. Again, criteria is not meeting. One point is now not well, like not properly, coming with a line in line with the in the favor of development. One criteria is not meeting. So that at this point, what you will do is you will make it the expense, the complete capitalized amount here. Obviously, you have capitalized some amount. You have capitalized means you have made the amount a development cost is asset, that will be again coming to the expense, return to the expense, and now you will write it as an expense. That is the point written here, that it will be reviewed at each year, and once if you ensure that pirate criteria is met, then it's okay. If it's not met, if it's having like 1 point not meeting, then it will all the expenditure that were capital expenditure means asset expenditure, means the asset value that you have written for the development, that will be written off as an expense in SPL. So this is something important. Wait a minute. Okay. So here is one question type thing. Let me show you. There is one logic, let me tell you. See, A part is basically just for the logic, not do, you don't have to do the calculation. Just I'm telling you the some knowledge. We have to calculate the profit treating development cost when it is expense and net profit amortizing development cost when it is obviously asset. Because obviously if the development cost is asset, then we will amortize it, and if it's expense, we will classify it as expense. So see, in 2005, 6, 7, 8. Revenues are written, same here, revenues are written. We are not concerned with the revenues. And then net revenue written, net revenue again not concerned. Now, main thing, if development cost is incurred as expense, for example, in 2005 you have done the development, and you have incurred the cost of 900. So what you will do, because it's the expense, so you will obviously from revenue it's SPL. Basically it's SPL is made, revenue minus expense is equal to profit. Basically it is written here. So revenue minus expense, you will classify complete 900 as expense in this year, because expense is something like, if it is being incurring and it is to be classified as expense, we will not say that it will be like subdivided into further years. No, expenses of today, this year, you will deduct from here. So basically, if you see, yeah, you have deducted all the 900 amount, all the amount from here. Why? Because it's a complete expense, and it's like normal expense, we will deduct it as the expense in 2005. But once, if it's made asset, it means in 2005, I'm writing it in 2005, you have classified as an asset of 900. Why? Because it is like, obviously he's saying that you have to calculate according to amortization, means its criteria is met, and now it is classified for this development. So for this 900, what now we will do, because in 2005, asset is classified. So what will be done now? Now it is, this 900 will be in SOFP as an asset 900, and the depreciation will be charged each year. So obviously 3 years are there, so I am assuming to be life of 3, so per year is 300. So that's why here in development cost, no cost is written here, because obviously for in 2005 it is written as the asset, as an asset in SOFP. But in further years 2006, 7 and 8, so the amortization cost of development is basically written here, development cost amortized. So 300 here, 300 here, or 300 here. Basically, he has like divided the amortization over the years, over the 3 years. But here, as a complete expense by its own, then you have to deduct it directly. But here, when it is amortized, then you have to amortize over the year. So impact on the profit is that if you are like classifying it as an expense in the upper case, expense, complete expense of 900 will be classified under 2005, resulting in the loss of 500. But for the case if it's asset, then the proper amortization is charged over the years, resulting in the profit in all the years from 2005 to 2008. Is that clear? It is just for the knowledge purpose I'm telling you. That's not like calculation. Is that clear till now?
Yes, sir.
Okay.
Sir, what is this net revenue from widgets?
Net revenue means sometimes, obviously, net revenue means the revenue minus, sometimes you have let me tell you from SPL. For example, you are rewriting sales revenue, normal sales revenue. And if you are paying any commission for that, so sales revenue minus commission is basically known as net revenue. Means you are selling something for 100, but for that you have to pay someone commission, so net revenue is 90. It means it, like for example, I have a pen, and I know that I can't sell this pen. So I will hire some specialized salesperson, and I will say him that sell this pen, this is of 100, but if you sell it, the $10 will be for you, and remaining 90 you have to give me. So I will get the net benefit of 90, that is known as net revenue. So these are basically uh, widgets are basically the product of this business, and other activities, maybe they're selling some other things as well. So from there they have written the net revenue, or the net revenue for that products, right?
Yes.
Okay. Okay, so we are ending till here because there is one extra point that we will discuss in tomorrow's class with the proper practice kit, because tomorrow in the first 15 minutes we will be completing the chapter, and the remaining time we will do the kit for this question, for this chapter. Is it clear till now? Do you have any
Yes, sir, it's
question?
clear.
Okay.